Hey guys, Stock Saturday, and it's been a fairly slow week, down about 0.7%, I think. Nothing sort of too much. The S&P is down 0.37%, so I've done ever so slightly worse than that. The tech side has actually done a little bit better, mainly sort of due to a 1.31% gain yesterday. So that is down 0.03% for the week, basically flat. So it's outperformed the S&P a little bit, and me, of course. We've had sort of a little bit of choppiness on gold and silver, and the crypto side, sort of one or two knocks on some of my non-crypto and gold and silver stuff. Broadcom sort of falling down the rankings here below CME Group now, and um, well, Amazon is sort of tumbling down the rankings as well. Still got my 1, 2, 3 of miners. Fresnio now at the top. 48,000. It's doing very, very well. £31.30 compared to my £7.22 average cost, where I thought I was, paying a bit of a premium at the time, but it, should do well. And yeah, so now it's up 330 odd percent. Very, very nice. Little bit of a, well, large disappointment though this week, which we'll have a look at. So Equinox Gold, my largest position, if you include all the options, which probably should because it's a very large portion of my portfolio. They are selling off their Brazil operations. So they had three separate mines. One of those being a sort of complex, the Arizona RDM mine, and the Bahia complex, which was sort of comprised of a few mines. They sort of collectively call the Brazil operations, to a subsidiary of CMOC Group, not heard of them, for a total consideration of just over $1 billion. They'll receive upfront cash of 900 million and a production linked payment of 115 million. So I think they're saying if it produces the whole lot of those assets produces over 280,000 ounces next year, then they will pay $115 million, and if it is less than or between 200 and 280, then they'll pay 12.5% of revenue. So I guess there is potential for that to be more than $115 million, unless I'm reading that wrong. If they sort of do 240,000 but gold price goes up, then yeah, that could potentially be more. But yeah, to me, this seems quite poor. It was, it's about a quarter of Equinox's projected production, and yeah, 1 billion doesn't really seem all that much. They're sort of saying this is a pivotal step to position Equinox Gold as a North American focused gold producer. I'm not quite sure why you need to be a North American focused gold producer. People are sort of wanting to get out of Middle East and Africa and places like that. I've obviously got B2 Gold with its problems in Mali, but I wasn't aware of any particular problems in Brazil. Government's a little bit sort of up in the air, but there's no sort of major activity affecting the mines. I didn't think they're not the best mines. They're quite high cost mines, but with gold where it is, I thought just looking at the 2025 guidance that they gave before. So obviously this consolidated guidance is projected to go up to about 1 million ounces in 2026, I think, if not 27. And yeah, Brazil would just sort of carry on rumbling along as it is. From what I've seen, they've got reasonable amount of reserves, and yeah, 250 to 270,000 ounces between the lot of them. at a, let's call it $2,300 all-in sustaining cost. So it's much higher than all the others. But I sort of keep thinking, like a few years back, you had most all-in sustaining costs being sort of $1,300 on the good side, and gold was $1,800, let's say. So you're making $500 above your all-in sustaining cost, and then you have some overheads and things that aren't included in that, and obviously paying tax on it and that sort of thing, and you were still sort of making a, relatively slim, I suppose, but an okay net profit with, gold $500 above all-in sustaining cost, where, on the even on the Brazil sort of high cost mines, gold is currently over $2,000 above this all-in sustaining cost. So, yeah, they might seem high cost, but they're still incredibly profitable. And, capex doesn't exactly sort of take a huge amount. They were projecting to spend some money on growth potentially, quite a bit on exploration. They were saying there was potentially potentially sort of high growth, higher grade, areas within these mines. So 135,000 from Bahia and 100,000 from Arizona. They had expansion potential, and yeah, I was sort of factoring these into my calculations, to be honest. So to sell this off, I think for $1 billion, I think if one of my miners said they were going to buy this, buy say a solo miner with just this production, 250,000 ounces at sort of a little bit high all-in sustaining cost. Everyone's trying to buy miners with an extremely low all-in sustaining cost, with the sort of fear that gold's gonna crash back down to sort of $3,000, $2,500, and maybe some of these mines wouldn't look attractive. But if it stays anywhere near 4,000 or obviously above, then yeah, if you told me that one of my miners was paying $1 billion for all of these three assets in Brazil, I would snap your hand off, to be honest. So yeah, to say they are selling this sort of basically hoping to get a higher multiple on the stock, it seems, for being North America focused and not just the Americas, North and South America, and balance sheet strength, like they can pay down some of their debt, significant immediate debt retirement, and lower interest expense. I think they could afford the interest expense, sort of looking at just yeah, pivoting, sort of looking at the market cap again. Back when they were sort of $5 billion market cap. When the price was half this, selling a $1 billion sort of set of assets when your market cap is $6 might look a little bit more attractive. But now they're up at $11 billion. Selling off a quarter of your production for $1 billion doesn't exactly sound all that good. And balance sheet wise, they've got a billion, just slightly over $1 billion for this, with debt admittedly at $1.6 billion. It's down sort of $150 million from the previous quarter. And as far as I could see, they, from this quarter onwards, are near enough printing money. So that was what they'd been telling us for a long while. This would be coming drastically down as they start making a fortune with gold prices where they are, and their mines ramping up. So I thought the idea was to just now carry on as they are, potentially have some growth projects in the future, but carry on as they are, pay all this debt down, and the multiple in theory would increase just on that, having a better balance sheet and having sort of more North America assets, which they have the Greenstone and Valentine mine. Basically that would increase their multiple on its own. I didn't think we have to start selling South American assets to increase their multiple. they have always been kind of focused on these, valuation metrics and being unhappy that they were quite low down on them. So if you sort of compare them to some of these others, Kinross and Evolution, Goldfields, they're sort of saying that they're um, low down on these because they are not North America focused, and they're sort of, they have a bit of South America in there. It's not as if they've got African mines that are, potentially being shut or taken over by terrorists. It's not quite that bad, and so yeah, they've always said that they want to try and increase, not necessarily just cash, but increase the multiple on the stock, and they see this as sort of enterprise value divided by production. Other companies get a lot more, and so we should increase that. But this seems like sort of trying a little bit too hard to increase that and not just letting the cash flow speak for itself. So as I say, it's hard to keep coming back to this, but I think if you just let the Brazil assets run and make money, and you say we've made a load of money, then the multiple would increase. I think the multiple hasn't been there because they've constantly had issues, and they've been ramping the Greenstone mine. That cost a lot of money, and causes net profit in the short term to be quite low. They've been ramping the Valentine mine, so we're still sort of not at huge profit numbers. But I thought sort of if not Q4, then Q1 just round the corner would be sort of very profitable, and people would start noticing, oh, they are making a lot of money, and people obviously are noticing. If we look at the stock price, it's up 173% in the last year. So yeah, I'm ranting a little bit, but I was kind of hoping that they would just leave things as they are to run. Basically, the assets start making money, they start paying down debt, and this would carry on. Now we're sort of looking at what is still going to be a 750,000 ounce gold producer, where I was thinking they would be 1 million. So yeah, the stock price sort of hasn't really reflected this annoyance. It's up. I'm not sure why it does say down 4% in the last week, but over the last month you can't really see much of an impact of this sale. But yeah, it's maybe hurt my feelings a lot more than it has everyone else. Moving over to KGHM, we got a little bit of admittedly outdated news from them. I suppose we'll get November's numbers over the next week or sort of week after, due to Christmas maybe. But yeah, these are only sort of monthly production numbers. I just like to see them. Copper, pretty good, 60,700 ounces in October, and 113.6 tons of silver. So pretty good. 10 months of the year, this January to October, is ever so slightly better than same period last year. And yeah, all looking pretty good. The rest of their sort of minor precious metals, 13,900 ounces, slightly down from this sort of 10 months last year. But yeah, it's the copper and silver that are the money makers. So all looking okay. And they have sort of put out they're calling it budgets for 2026. I would sort of call this guidance, really. Yeah, production silver, they're expecting 1,296 tons. So that's sort of roughly, if my calculations are correct, works out to about 41 million ounces. So that's pretty solid. Puts them, as far as I'm aware, still second behind Fresnillo for production. So very, very strong. They are starting to get a bit of love for that. Stock's up 120% for me, with them sort of still being, somewhat copper focused. I think they are getting a little bit of love for that silver as well. So that's pretty good. Payable copper expecting 594,000 tons, which is pretty good. And on the international side, 51,000 and 90,000 from Sierra Gorda. These are the sort of much cheaper cost mines, so that's pretty good. And also a little bit of precious metals from the international side as well. You sort of they do a little bit of gold and platinum and palladium, that sort of thing. So yeah, liking these numbers. So coming over to economic news, we did have a reasonable amount. UK employment numbers and things, 20,000 increase in unemployment claims, not the best. 16,000 down on jobs, and unemployment rate up to 5.1%. So not good at all. Average earnings sort of up quite a bit, and they did revise last month's up, but yeah, 5.1% unemployment now is something to be noticed. US job numbers, though, probably looking quite a bit worse, I would say. You had the ADP, they're coming out with this weekly now. I think this is a 4-week, so it's an average of the last 4 weeks that they sort of roll every week. So they're calling this weekly, but this isn't 16,000 gain in the last week. This is an average of 16,000 per week over the last 4 weeks, if I read it correctly. So, yeah, not amazing, but not terrible. The sort of establishment numbers, we had a double this week. October and November all sort of rolled into 1 week, and October was negative 105,000. So Jerome Powell has been saying that these numbers are overstated by 60,000 per month. So, yeah, a little bit surprising. Private side, that was 52,000 positive. So, I guess government jobs down 150,000 jobs. They have, been sort of laying off a load of people this year, and that was sort of delayed from what I understood. So, maybe that's, largely come in October. And sort of private helping out a little bit at least. And then November numbers came out positive, so minus 105,000 to a slightly positive surprise of 64,000. And well, it looks like even there was some government losses in there being made up for by 69,000 of private. So private is doing quite well, and government jobs are down, which I guess most people would say is, kind of good, stripping the government of a little bit of unnecessary jobs. Unemployment rate though pushing up, it was 4.4% last month, or whenever they last reported this. 4.4%. It was expected to be 4.5, and it was 4.6. You do have this U6 unemployment rate as well, which sort of includes, some portions of people that aren't included in the main one. So people that have sort of, I think, stopped looking for jobs, and people that are sort of part-time but would like to be full-time and that sort of thing. If you sort of add all of those up, then they have this U6 unemployment rate, and that was 8% last period. Now 8.7. So yeah, rather strong. I will just open that up and see what that is sort of over time. So yeah, that is a very large jump. It's sort of been 8.1, 7.9, 8. It was 8% in March. So to rocket up to 8.7%, that is rather strong. It was obviously much higher back in 2021, sort of COVID times, but yeah, it had been lower and sort of bottomed out in 2023 and has been, increasing quite a lot. There's a lot of talk of youth unemployment not being particularly pretty at the moment. People struggling to get jobs. And yeah, I think that was largely it. Some sort of PMI numbers and things that were slightly worse, but still positive. And then you had CPI numbers for the UK, quite a bit lower than expected, but they're still above 3%, so it's not exactly great. But they were expected to be 3.4, 3.5%, and they were 3.2 on headline and core, so that's pretty good. Thursday, they did cut interest rates. That was sort of expected, 5 to 4, because things are looking a lot worse. So yeah, we cut 0.25%. The EU were expected not to, and they didn't. And yeah, Thursday you got US CPI, which was again quite a surprise to the downside. It was expected to be 3.1% on core and headline, and it was 2.6 and 2.7. So again, there's a lot of people saying that there's some gremlins in these figures, partly sort of government shutdown and partly rents and things, but they are the numbers. When they were going up, people were saying they were being manipulated downwards, and now they're sort of down. A lot of people are saying they're being manipulated down again. But yeah, who knows? Yeah, retail sales and things. I think looking at these for the UK is sort of a little bit silly sometimes on a monthly basis. You can't really take too much out of it. Retail sales on a annual basis 1.2% higher. If that's not including if that's nominal and not sort of including inflation, then I guess that's a fall in real terms. So yeah, not great. So overall on the portfolio, as I say, not a huge amount of change. Some of my top holdings sort of doing particularly well. Fresnillo and Coeur Mining sort of coming back as well, 18.25 now. And as I say, KGHM 261, very, very nice. Looking at the options side, as I say, Equinox options took a little bit of a hit, 149k, so it's down about 11,000 from last week, which is near enough all of my loss actually, but obviously everything else has been up and down as well. And yeah, still wincing about Equinox. That is sort of quite annoying to me, but we'll see where they go over the next year. That sort of being my largest holding, I was obviously hoping to still have high conviction on it, but it's not something I'm looking to sell just yet. I did buy some B2 Gold, more of the January 2028, $10. I think that's got potential. It's down a little bit on percentage, but sort of barely moved. Hoping the Mali issues get resolved, and yeah, they are sort of producing quite a bit more than Equinox now, and sort of still $5 billion, I think, below on market cap. So if the Mali issues can be resolved, they're also lower all-in sustaining cost as well. So they might have a bit of jurisdiction risk, and people don't like where the gold is coming from. But I always just think if nothing significant happens, then you can't deny cash flow if they start doing sort of extensive buybacks. And I would hope buybacks over dividends, because dividends don't help the share price. I think it could do really well. It's just whether those issues can get resolved. Herein sort of barely moved, but yeah, hoping for good things in Q1. These are March options. Coeur Mining only has another 3 or 4 weeks to run, so obviously have to sell these at some point. I don't particularly want to buy 1,500 shares of Coeur Mining, so yeah, we'll see at some point when I sell those. I did buy a little bit more Hive, January 2027, hoping for a good crypto year or Bitcoin year next year. So we'll see. My this coming January $10 options have gone to zero because well, they haven't expired yet, but it's 3 weeks away, 3.5 weeks away. Stock would have to nearly 4x, sort of 3.5x. So yeah, people have given up on those basically, and even $4. I've got some in there that are $4 strike is sort of looking a little bit unlikely unless we have a huge pump. I've sort of been trying to sell a little bit of them off, not particularly successfully, so they probably just will have to be a tax write-off, and hopefully, I guess I would have to call it third time lucky, maybe make some money on those next year, and there is potential to, make back everything that I lost and more, but we'll have to see. Similarly, Nakamoto has near enough gone to zero. These are March options, but I think even if Bitcoin sort of rockets up, back to all-time highs, sort of 120 by March, I think these treasury companies aren't going to do particularly well. Bitcoin goes up 50%, the stock could double. That's still a loss for me. So, yeah, expecting these will probably go to zero, but might as well leave them there for the sake of 250 quid now. And yeah, 25. No, I haven't got 25k cash in there. I will have to knock that down a little bit. That's I think about 17,500. So yeah, saying that, I'm actually a little bit worse off, probably down 1%. So oh no, 1%. But there you go. Leave your thoughts in comments below and like and subscribe. See you soon.